Hello everyone and welcome back to Bitcoin News. Again, thank you so much for being here with me. Have a great afternoon. Let's take a look at Bitcoin to see what's going on. 57,600 is a nice little bull pennant breakout here. The fact that I was able to see that before it broke out again is great news, but a trend isn't always a sure thing. Actually, there aren't any trends. In fact, bull pennants have a lot of falsiness to them, if that's even the right word. This means that every bullpen we've seen in the last 2 or 3 years has failed. Again, I believe their success rate is between 55% and 60%. They don't have a very high return rate. This worked out because of a lot of factors coming together at the right time. Again, if you ever use or trade candlestick patterns or patterns in general, you should always make sure that you are. First, you should look at everything. Don't just jump into a trade because say it has a bull flag. You want to check a lot of things. We're going to quickly look at a few things here to make sure we're close to the daily goal. With the help of the candlestick closing, I can get a sense of what's going on, and I want to go over these liquidation levels again. If you missed my video from earlier today, 59,000 has a lot of sell-offs. In a broad sense, between 10 and 20 billion. Most likely it will just average out to 15 billion. There are between 1.5 and 2 billion on each of these lines. You can see that there is a lot there. Because of this, I think we'll see a candle wick somewhere between 59k and 60k. It makes sense. This isn't the only reason you make a deal, but it's a good one, right? Hey, this helps us figure out that the whales are going to be hunting in these higher areas. There's a good chance that going that way will work out, okay? Again, there are a lot of other things that support this. A lot more bankruptcies beginning to build to the upside. This isn't the only thing. There are a lot of those shorts growing up at that level. And it should be that way, right? If you're trying to short right now, I know it went a lot faster than it should have. In fact, I wanted to catch a short between 58 and 56 Kansas Day, but we missed the chance because it happened so quickly. As quickly as that, I wasn't able to make that deal right away. That's also going to happen a lot. I'm sure there have been times when you've been driving and thought, oh my gosh, it's gone. But this was the best deal ever. Okay then. Anyway, the main thing to remember is that chances are plentiful, and you'll seize the next one. It's all right. So check this out. Over the price movement, we can see a lot of moving averages. This is where things are different. Those are pretty close to that amount of liquidation though. As I said earlier today, 58.8 thousand and 59,000. That's a lot of pushback. Also, our control point is at 59,000. Forgive me if I'm wrong, but the global point of control is 59,000 when we zoom out. Let us look at this. I'm sorry, it's the second biggest amount. It's clear that we got 64,000 and then 67,000. But again, if we look back over the last month or so, which is still a pretty long time, this is still pretty important. That amount is 59,000. So just know that there has been pushback ahead of US or above us in the last couple of months. But if we look at the bigger picture, on a daily period, we can see that the RSI is below 50. Until we break above that level, I still think we could go down. The same thing will happen with stochastic RSI going up. It will start to peak. In the next few days, MFI will rise and MACD will soon converge. We're not quite there yet, but we're getting there. Of course, the fact that our TI is going up is a very good sign. Even though the price is below these moving averages, there are many reasons why it should go up even more, at least until it hits 60,000 again. I'm not really saying 60,000, it's more like 59. But I think we'll see 59 and then 60. That's just how things work. So let's go ahead and look at the 4-hour. The 20-day and 50-day SMA are both above us. Usually that's a very, very good sign. That's the tight side of dealing, where you want to be if you want to be long. Once more, you can still short into that. Just know that your profit margins will have to get smaller. You shouldn't just cut the amount from 59,000 to say 50,000. That's a pretty big goal. It depends on the bigger picture of your life. Of course, if it's a long-term swing trade, things might be a little different, but that's only because you can't be sure that will happen. A lot of people said we'd see the 40,000 area. There is still a chance of 48 to 49,000, but it's getting less likely now. Once more, we haven't broken positive, so let's not get ahead of ourselves. However, there aren't many reasons to think you'll get to the low 50,000 range right now. While it's still possible for prices to break down and keep going down, there is a lot of strength and supply coming in. It's not very smart to understand or believe that will happen. Try not to bring yourself down. Don't just stay a bear because you want the price to go down, okay? I understand that you missed your chance to enter at $50,000. That's one thing. But $20 cost average on your way down. Anyway, that's easier said than done right now. So, don't cry over spilled milk. On the other hand, it's all good either way, right? It depends on what. There are many things that affect this, but right now, it seems likely that the price is showing more strength to the upside than the fall. We're still looking pretty good when it comes to some broad divergences. If we do manage to break out of this 58,000 level, which looks pretty likely at this point, 59,600 is a good chance, and it could even be as much as 62,000, right? That CME gap from before still hasn't been fully filled. If we look at this, we can kind of suggest or bring up again. We had a sudden CME break from 54 to 1,542,500, it's not very big, it's not very big. If I remember right, we had this gap before that hasn't been filled. Wait, no, hold on to what you know. It could have been filled up somewhere. It's there to begin with. It's just not very big and not easy to see. That's about 2/3 to 3/4 of the way full. There was still a bit of a semi gap above 60,000 though. In any case, that is an option. We're going to knock on that door to see that. That could really happen. Last but not least, let's take a look at the hourly and call it a day. We can see that each Moga cloud is still sending us buy signs every hour, which means we're in good shape. To put it another way, there are no lagging gaps and no conversion lines above the baseline. Everything is fine in the cloud. At this point, it seems like you have a better chance of success going up than down. We're making a cup and handle pattern that looks really bad. Strong chance that things will get better. To go over this one more time, most signs point to it wanting to keep going up. The price wouldn't have much of a reason to drop. But keep in mind that this is also a caveat. The Asian market hours are coming up soon. A lot of bad things happen when the Asian market hours start. To put it another way, that's not a joke either. This is clear to see. This was the market in Asia. They sold. Okay, it's possible that we'll see the same thing again. A lot of the time we seem to be seeing during traditional market hours, prices go up, but as soon as the Asian market starts, prices tend to go down again. We might want to think that the price will go down because it wouldn't be likely or typical for them to raise it right now. But you can't be sure what the market is like there.